All right, good morning, guys. Good morning. I hope you all are doing great. It's a new week again, and you know how we always do it. So, it's another awesome time again for us to look into what the market has for us. Already, yesterday, we already laid a solid foundation about what we're going to be doing, right? We laid a very solid foundation, and already some persons are already making money from the few analysis that we did yesterday, right? From the few analysis we did yesterday, a lot of persons are already making money from it. So that's to tell you that well, this week is already a promising one already. So we don't want to start going front and back because we already laid a very solid foundation for the week. So that being said, what we're going to be doing more often today is just making sure that we just follow up with what we did yesterday and also paying attention to structures in regards to setup as well too that we're going to be looking into. So what we're going to be doing first thing first is just going to the chart and what seeing what we can possibly do this week, right? So all that we actually did yesterday, the speculation and the direction possible ways in which we can actually look out for the market is already playing out as you can see. It's already playing out. So all we just want to do, we want to position ourselves in alignment with our plans and making sure that we don't just trade casually. Now, if you have been the type that has been trading irrationally before, randomly, now this is the best time for you to follow through thoroughly with what we are doing in the channel and for you to be able to what get discipline and also have a trading plan to also follow to. You don't want to trade anyhow at all this week. You want to trade with clarity, you want to trade with good reasoning, so that whenever you even take a loss, you know that okay, this was what happened, this was the mistake we did, and this is how we can actually correct it. But when you're just trading casually, you know definitely you do not know why you're going to be taking loss. You don't know why you took a loss, and you don't even know why what you are supposed to also adjust, right? So, but if you have a good reason to why you're actually taking a trade, if anything should go south, definitely you have a reason to say, okay, this is what happened, this is what I did not put into consideration, and this is what we did not look. Hence, that's why we did that analysis yesterday in preparation of today's class. So, those who were on the session yesterday on the Telegram channel, right? You already know what we are going to be doing today, and also in anticipation of what we're going to do too. We're just keeping it simple for us to be able to what have a guide, for us to have a follow through on what we are supposed to be doing. Not that we'll be trading blindly or trading casually. So remember, is also the best time for you to also get yourself funded, which is having a proprietary firm that you're trading with, or if you have your personal funding, you can also what get that as well to fund your accounts and trade peacefully and casual. Now, one important thing you want to also do for yourself this week, you want to be disciplined, right? And how do you tend to be disciplined? You want to make sure that what you are cutting off just one trade this week that will lead you to profitability. Let that one trade be what you're going to be taking. If you're also going to be taking two trade, right? You're going to be taking two trade, which will also lead you to profitability. Let it be that it is those two trade that you're going to be taking. If it's theory, no problem. But you don't want to join others who are going to be taking random trade because, mind you, you do not know their pocket. You only know yours, and you know how you're actually able to get the profit you are trading, or maybe the account that you fund. No, some persons might be very cool with taking huge risk, right? Because they know they can afford it. If they should lose that account, they can still it. But you, for instance, now if you blow your account, you know, for example, that it might take you a longer period of time for you to get that particular account again. So you do not want to trade like every other person. You want to make sure that what you are taking just minimal trade, you want to take minimal trades, and also making sure that you do not risk anyhow. You don't want to follow what others are saying that I don't like wasting time on my challenge phases. I just go hard on and that's it. Yes, those are for people who have the money. Those are for people who can actually afford it. If you're not finding yourself in that situation, definitely keep your account safe, trade safely, trade kind, trade in a way that you know that you can actually still be in the game. Because definitely every time the market will not present equal opportunity, and when the opportunity comes for you to win, definitely to reach your turn, you win. And at the end of it, when you are funded as a trader, that way you know that you cannot keep taking 1%, 2%, 3% consistently from the market, and that will make sense to you in your local currency, right? So do not find yourself in that edge of saying, I want to go hard or go home. If you are going hard, know that you have the money to afford. If you cannot go hard, just trade peacefully. So this week night is not a week for us to start what's it called trading anyhow. You can see we've actually aligned ourselves with DXY, which is the base currency for the USD, which is what you can use in measuring the strength and the weakness of the dollar. Now we've aligned ourselves with DXY and also across the dollar cross as well too. So you don't want to see that okay, you are just going into trade without a very concrete reason. Trade with a good reasoning, right? So now being said, we're just going to go into the chart now. And most importantly, too, if you want to look for any real my recommended broker, the brokers I use are in the description. Check them out and also put them in the free Telegram channel as well to check them out as well too. And then you can what trade with the broker you care or want to use, right? You don't want to just say, okay, this is the person is if it's not suitable with your style of trading, leave it. You want to use a broker that is suitable with your style of trading, that you know that their conditions are cool with your own way of trading. And the same way too with proprietary firm. Trade with the proprietary firm that you know that what are cool with you. For me, currently, I use FTMO, and that FTMO is what I've been using for a very long period of time. They don't give me issues, and I'm cool with it. Though they're quite expensive than other brokers, but I love the fact that they've been consistent in the game and they still give out payout and they don't give any. They are not. There's no form of any hidden rules. All their rules are open and are very much clear. So I just like the fact that we can actually just trade, withdraw money, and then we are good to go. There is no reason for me to start saying, okay, they did not pay me, or there's one rule that I did not see and stuff like that. No, everything that you need to see, everything that you want to know, everything is there inside their what's it called, their rules, and it is straightforward. So use a recommended broker that you know that is going to help you. So now quickly, we're just going to be looking at the chart and then see what the market has done in respect to what we've done yesterday, right? So let me share my screen and let's see what we have. Let me share my screen and let's see what we have. Let's see what DSY is actually doing. Let's see what DSY is actually doing. Oh, what is this? Okay, now let me see. Okay. I don't know if you guys can see my screen now. Hmm. Let me see. Let me see. Can you guys actually see my screen now? Please, if you can see my screen, let me know. Okay. Okay. So, why is it not lagging? Okay. How about now? How about now? All right. Cool. 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 All right. Good. So, as we actually said yesterday, now you can clearly see that this was what I actually put out as the annotation for what's it called for yesterday, right? And why did I did this? I think I explained this why the market will have to make a pullback before any further continuation. I think I explained this yesterday for those of you on the call. So the reason why I actually did this was because we still have more inefficiency here that I looked at it that okay, there's high tendency of price actually still coming back to this region before any further push. And if you notice when the market opened, what happened? Price just quickly took out this high. This is just a sweep rejected, and you can see there was a gap here. Obviously, you know that this gap market has to fill out this gap for price to what actually maybe make any further push. And the reason why we're actually looking at this high is because from the H4 time frame, right? From the H4 time frame, we can clearly see that what we have a break of structure here, making this high what a weak high, and this low here what a strong low. And as you can see, we actually put that right up there, right? Strong low, weak high. And why is this place a strong low? It is because this region was what started that push, and that was what was responsible for this price moving all the way up to take out this high. And for price to actually taking out this high, it means that well, this low is actually strong and this high is weak. So because this high is weak, we're anticipating that if market should make a pullback into the discounted region, we should be able to break to take out this high as in continuation. And as you can see, what happened when we talk about range, this is a low and this is high. So this is point A. Why this up here is point what? Point B. So this is point A, right? And then this is the point. This is point B, right? So now looking at it now, what are we considering? We're going to consider between A and point B, right? And also, we often buy from what a discounted price, and then we sell from what a premium pricing. So now, looking at the market, we know that if we should put our gang balls between this point A and point B, right, we want to start buying from what the discounted side, right? And as you can see, price already make a pullback into the discounted side, and now price actually started moving, right? So as soon as price is moving, what is going to be our anticipated target? It still is higher, right? And if for any reason price fail to take at this and price come back to take at this low, that we will now reevaluate to start seeing what is possibly happening or what are we to be expecting. So now all we are going to be doing is making sure that what we trade in the direction of what where the market is actually heading to. Because for price to actually break this area, make a new high here, it simply means that what we should have what a continuation to the upside. And the reason why I actually mark this pullback is because we still have inefficiency here, right? That we expect price to actually come back, tap into before the further move. And now, that being said, we know that we have this area as point of target, and then we're going to look into structures on the lower time frame, maybe on the M30 time frame, right? For us to be able to see what the market is going to be doing and building up for us to continue. And that being said, as the market keeps buying from this region, definitely every other thing we're going to be selling now, just like as we said yesterday, right? Just like as we said yesterday, since price was actually dropping, right, from DXY, what do you expect? You expect a continuous buy on gold, on the dollar cross, right? Euro USD to push, GB USD to push, AUD USD to push, NZ USD to push, and then gold to also push, right? Since we have this little pullback, this pullback where you see these two candles that you're seeing on the 8 for now that dropped to come back into this inefficiency, definitely that will give room to what, to a buy on those dollar across, right? Just a push. So possibly if this market continues selling, if there's a continuous sell pressure, definitely what we're going to be expecting from the euro dollar cross, euro USD, BUSD, it's going to be what, a continuous buy. So now let's look at that on the M30. So looking at this on the M30, right, we will see that we have a sweep here. Price swept this high, and then we have a gap here. Obviously, the price has filled this gap up, and the price pull back into what, this imbalance that we're having. Now, this imbalance that we're having, we don't know yet. We still have a kind of a little demand here, right? We have a little demand here. Why is that area a demand? You can clearly see that we have a break of structure here. We have a little break of structure on this point here. We have a break of structure here, and we have inefficiency here. So definitely for price of actually broken structure, right, with this inefficiency, we expect that what the market should make a retracement, filling what this inefficiency, right? This inefficiency we have here for further continuation. That being said as well too, if we also consider that this is a low and this is a high, what we need to do is just put our gang balls as well too. Measure from the low to where the retracement started from, right? We definitely now know that what price should come into our discount side for us to start looking for buys. And as you can see, the market has actually moved, tapped into the discount region. So there's possibilities of price now moving towards our intended direction, right? For there's possibilities of price moving to our intended direction because already price has actually what, made a retracement after this break of this internal structure here, right? Price has moved to the up, down, and then failed to make a new high. This is just a rejection, right? And then price make a pullback, right? This pullback is also to fall back into the discounted region. So more so, we might not start having a build up. So if we keep having a build up and then price keep making a continuous push and taking at this high, definitely we now know that what we are now moving in our intended direction to the upside. And that way to everything relating to dollar, we now have to what, be selling. Definitely everything around the dollar will have to what, be selling. So that way we will not start, those who are still buying GBP USD, Euro USD, and good USD, at that point that they should start taking out their profit, right? Because you know that at that point the market is the DXY, which is the dollar or what's it called, instrument, is actually now bullish, right? Is now pushing for a bullish move to take out this particular high. So now if we now look at gold, for instance, now that way you can now see that what, they might not start being a rejection for price to start looking for a sell. Because trust me, anything that you're seeing on the dollar side now is going to be opposite of what you're going to be seeing on its cross, which is the AUD USD, the GBP USD, and the Euro USD. So mind you can see So those who you saw me post their result now, they actually bought from this particular demand level, right? And why did they buy from this demand level? There's a place for what? A break of structure here. We have a break of structure here, right? We have inefficiency, as you can see, right? This is a strong low, right? This is a strong low. This is a strong low, and then this is a weak high, right? Reason being that what we had a break of structure at this point, and then we have a place of what inefficiency as well. To have inefficiency, as you can see here, right? So definitely, why are they not buying? They bought from this demand area, right? And then they target this weak high. So now, since they've targeted this week, normally where they are supposed to be looking at taking out their profit, first target, if they are supposed to take any profit, it should be supposed to be what this region here, as you can see, that should be what they are their first target, because this area is a weak high. Now that they've actually taken their profit, what will be the next thing that will happen? So for every reason, if the DXY should actually continue selling, right? If the DXY should now start selling, here's the DXY. Let's have the DXY here. If the DXY should start selling, what do you expect? What do you expect? If DXY start buying, sorry, what are we going to be expecting? We're going to be expecting what? A dump on the dollar cross, which is this. So once the DXY starts buying, we're going to be what? Anticipating what? A sell. And for me, one thing I want to do, and also indulge you all to do, I would not just want to start buying from here casually or blindly, right? Because price took at this low and now start buying. No, the best thing I want to do is what? Making sure that price is actually in a very key significant region. Take for instance, if the market should actually dump into this area here, which is a demand level, market should dump into this area here, which is the demand level. It makes sense for me to start buying because this is a key level, right? This is a key level in the market, which I can now start looking at for possible buys from. Because now I know that that is a very significant area. I know that this is a very significant area in the market, which is a demand level, right? So if the market should be able to come down here and is buying, that way I should now start looking for sell. But right now, if the market is actually buying from here, the market is buying from here, and I'm seeing sales on all the dollar cross, definitely I'm not going to do anything, because it makes sense that you are buying from significant area. Here you can reckon with that, okay, this is the point of evaluation. Take for instance, if you're going to be buying from here, for instance, let's say you are buying from here should be your point of evaluation. Your point of evaluation should be this low, right? Because this region was what was responsible for this little break we are seeing here, right? And mind you, if you are doing that, no, definitely your stop loss will be very, very wide, right? And you don't want a situation where your stop loss will be very, very wide like this, because where you actually targeting is, it's not like you are targeting a very far away zone, which would make sense for you. This is where we are targeting as a weak high. So the risk to reward does not really make any sense yet, right? It doesn't make any sense. So the best thing, you don't want to start jumping into that. It makes sense for you to wait to see if truly that this guy is going to buy. Let it come back to this demand here on this internal structure. If it's coming back to this internal structure demand here, it makes sense, because you now know that this is a demand level. You can see the inefficiency there. You can see the inefficiency and the break of structure. So your point of evaluation will now be what? This low here. The point of evaluation will be this low here. That way, definitely you will not have to start looking at the dollar cross, Euro USD, GBP USD, which one is now more aligning, right, in a very significant area as well, to that can make you to start buying. So right now, I'm not going to be doing anything around here. All I want to see is, unless the market start building up. So when I start seeing that the market is building up structurally and building the structure and pushing, right, that way I can now start looking at for my dollar cross, so I can be able to enter for a sale. Mind you, now take for instance gold. Now gold is currently sitting here, right? Let me remove all these things. Gold is sitting here. So gold is on this level, for instance. Now gold is on this level. Let's see here. So currently we'll say this is a break of structure, right? The market broke this structure already. So let me do this. This is a break of structure. Reason being that what price is coming from this demand area here, right? This of this M30 is coming from this demand area here, right? So now what are you expecting? Now if you look at candlestick patterns very well there, if you look at candlestick patterns very well, you can clearly see that what happened there. We have a bearish engulfing candle, right? We have a bearish engulfing candle, which is indicating a sell, right? But the question now is, are you going to be selling just because you saw a bearish engulfing candle in a resistance area here? It doesn't make any sense for you to be selling, because trust me, one thing that will be a resistance to what you're going to be doing here might be this area here. You see, this area here, we also have a demand. Where is the demand? The demand is there because one, price broke this internal structure as you're seeing here. So since price broke this internal structure, even if the market is going to be selling, market might just sell into this area here, react from here, and possible continue. That way, if it's actually continue buying the other way, what will not happen? DXY will also start what? Looking for that possible sell too. DXY might not have room to start to sell to this back here, maybe getting to here before possible reversal to the upside. So you want to make sure that what you are aligning yourself in a way that once the DSY is sitting in a key zone, your gold or your Euro USD is also sitting in a very key zone, an area that can work, that can help you position for a better. So you now have a reason for a point of invalidation that okay, at this particular area, the market is going to invalidate at this area and I will accept it. So, but if it's not aligning properly, what you want to do, you just stay off, watch the market, because what you're going to be doing 90% of the time is for you to be observing what the market is doing, and just 10% you executing, right? Not that you're going to be executing 90% of the time and waiting 10%. That way, it doesn't really make sense. So you want to make sure that what you are tracking everything that you are doing so that things can actually align for you to be able to what trade in a very good way this week. This week should not be the time that you're going to be trading anyhow. You want to make sure that what you are trading with a very good reason. So for me now, all I'm going to be expecting or doing is seeing the fact that okay, let me remove this guy here. Let me remove the guy. So as long as price has actually pulled back into this region, this is an internal, what's it called? Internal break, right? So I will not want to do anything here yet, right? Unless I see that maybe price gets back to this internal demand region, right? So if price gets to this internal demand region, I want to start looking out for my dollar cross to see what will possibly happen, and then we are buying. So let's look at Euro USD as well too. So Euro USD, let's see. So you see the annotation I also gave to yesterday. I was saying that they should have what a pullback into this inefficiency region as well too for us to be able to what sell, right? Not that we're just going to jump into the market. So there was two things I was looking at. I said, okay, if the market should open and then the DSY is actually buying immediately, definitely what we're going to be expecting is that we're going to be seeing that the Euro USD is going to just be dumping. But for every reason, because of that inefficiency we are seeing on that DXY, I also make it clear to everyone on the live session yesterday that we're possibly going to have this pullback to fill up this inefficiency for us to possibly have that sell coming in. Now, one thing that will happen now is if you take a good look at this market, right? We still have this supply here, right? We still have this supply here, as you can see. There's this supply here that we're having, right? Which, if that DSY starts selling to that demand, right, definitely we should expect what's it called, gold, the Euro USD to also come back to this what's it called, supply region. And as you can see, it's an internal stuff here. We have an internal region here, which is the internal break of structure here, right? We have internal break of structure here. So, but that way, we're not just going to be jumping into the market, just selling from here blindly. If we're even going to be selling, it's not going to be a bad one, because we know that okay, we are having price sitting on a demand region, on a supply region, in respect to DS, we're also sitting in a demand region, which is this area too, right? And for us to be able to look into the market buying to this possible high, right? Because overall, from the H4 time frame, the reason why we're going to be doing that is we are seeing that there is a continuation of a buy. We're seeing that the gold is making a continuation move. Is a continuation buy. If you take a good look at from the downside, it's a continuation buy. So for every reason, if we are seeing a demand there and the price is reacting off that region, we now have a good reasons to start buying from there. And if we don't want to rush into it, we might now use our candlestick confirmation for us to be able to look into what will possibly happening in that region, right? And let's also look at GBP USD too. Let's look at GBP USD. So you can also see GBP USD too is also doing the same thing. We also have a supply region here, right? So have a supply region here, which has inefficiency. So price might be drawn to all these regions, right? Price might be drawn to all these regions to fill up, right? So instead of you to now say, okay, you want to start looking for sales, you want to start jumping in from sales here and putting your stop loss on this side now, which does not make any sense. It's better you start looking at key regions in the market, areas that you know that okay, if price is actually pushing into this what's it called, this supply region, right? It makes sense because now the DSY will also be in a very key region, which is a demand region, and this guy has inefficiency, right? And you can see a mini break here now. So for every reason, if we now start having, if we don't want to go aggressive to start selling from this particular region, we now want to see what the reaction that will happen for there. By the time we start seeing a build up of a continuation sell, that way it gives us confidence that now we now have an area of target that this market will sell to this region, knowing fully well that what it reacted from a key zone, right? So at the time the DSY is gaining strength, we're actually looking for GBP USD selling, and then we now know that okay, yes, we're in alignment. But just thinking of saying okay, because price has actually taken out this, that we have a bearish engulfing and we want to be selling, or we should start looking for buys to start buying from here, it doesn't make any sense, because that way we are just buying from what, an impulsive move. It's just like you trying to run into a moving vehicle, or you are trying to just jump into a moving train. My guys, trust me, you'll get yourself injured, right? You'll get yourself injured because you are actually just what, moving into a running vehicle. But if that vehicle is in the bus stop, or maybe the train is at the park or place of entry, right? You know that you're going to enter comfortably where you sit down, and then when the vehicle is moving, you are moving with it because you're already in that particular vehicle or particular trade. That is how it is in trading. So you want to make sure that what you are going into the market at prime areas, not just jumping into the market blindly because you want to feel among, or you want to quickly cash trade. No, it is better you are taking one trade in a week, right? And you have a clear reasons why you are taking it, right? Than to just be taking trade casually where you do not have clear reasons why you should be taking that trade. You don't want to start diving into the market anyhow this week. This is not the time for that anymore. You want to make sure that what you are positioning yourself well for what, for profitability. Because if you do not position yourself for profitability, definitely you're not going to see profitability. You're not going to see profitability. You're just going to be trading like every other person because you feel like, oh, everybody's trading, they're making profit already. Let me quickly jump in. No, have your how and your why. If your why is not enough for you to be trading, do not find yourself there. If your why is not enough for you to be trading, do not what, find yourself in any trade. Just wait. So let's look at AUD USD. So AUD USD is already at this region already. Definitely looking at the fact that DXY has not actually positioned itself well, it means that if the DXY still keep pushing to the downside, possibly price may want to get to this resistance region first before any further sales that will be coming into the market for this AUD. So AUD is not really aligning very well. It's not really aligning very well. So where price might want to get to first is what, this resistance level, right? So our main focus is what, on the DXY, right? Our main focus is on the DXY, looking at price coming in back here. But for any reason, if the DXY start pushing from here, right, that is only when we will now start looking for sales across our pairs, right? And there's still some other key things, so I'm also going to look out for before I start jumping into the market. I just don't look into only structure alone, right? I also consider, okay, where are the liquidities, where are the inducements, what is going to possible stand as a storming block to our market, right? What is going to start as our impedance to our market. So we don't want to just jump into market blindly. We want to make sure that what, we are well positioning ourselves. So for me, for the week now, I will just examine what is going to happen on DXY. So if I see what the DXY is doing, the DXY still keep gaining strength. Already, New York session is actually coming very soon. We have some few hours to New York session, and that is where the dollar is going to really position itself well for what, for motion, right? Because obviously that is their session. So if the New York session comes in and we start having a very a strong momentum on DXY, definitely we might not start looking out for sales on our crossbelt. Sales in terms of what, trading from key zones, not jumping into the market impulsively. So do not try to jump into the market impulsively. If you are using support and resistance, best look for a support level or a resistance level to start trading from. If you are trading off supply and demand, which is the order block, best look for an order block to start trading from. Don't just see an impulsive candle and jump into it. Don't just see an impulsive candle and jump into it, because that way you're going to get yourself moved, right? Just make sure that what you are seeing price sitting a very key zone and you are seeing possible reaction. That way it makes sense for you to now go in. So for me now, I'm just going to stay on the other side and then see what is going to happen. So looking at the gold, let's look at the gold thoroughly, so we see what we are actually anticipating. Now if you look at the gold based off the H4, right, let me show you guys something. Based off the H4 time frame, you can clearly see that, right, market actually made a break of structure here at this low, right? This is the break of structure here. Let me indicate it. A break of structure, right? So this one is based off the daily time frame, right? Based off the daily time frame, it means that what this low is actually weak. Based off the daily time frame, it means that this low is actually weak, and then we have this high to be very strong because it was this high that was responsible for this whole movement to price breaking this particular low, right? So meaning that what if we're going to be looking at anything first of all, as we are buying, we want to buy into what? Into the premium side of this particular range, this high and this particular low, buy into the premium side, and then we'll start looking for what sells to take out this particular low. But for any reason, if price does not give room for that, what are we going to be doing? We're just going to wait, right? We're just going to wait and trade in accordance with structures. Trade in accordance with structure. Now, let me show you something, guys. Let me show you something. Yeah, is this guy? Okay, let me remove all these things. Let me remove all these things. So the fact that we know that okay, price should move into the premium side for we to start selling, that does not also mean that what we will not pay attention to what is happening. Because if you take a good look at what is happening, right, like what I explained to the guys on the live session yesterday, we can clearly see that inside this movement we have all these internal range. The market did its own reaction and stuff, right? Pull back and then break. So the first possible target we want to look at for is what? Price moving from this particular low to taking at this high. And if you can clearly see, right, if you can clearly see, you will take note that when price gets to this level here, normally price is supposed to respect this region here, right? Price is supposed to respect this region because this is a supply on its own. The reason why it is a supply is because we have a break of structure here, as you can see. We have a break of structure here, which is a substructure to this whole entire leg, this entire move from this up here down to this side. So this is a substructure. Now, for every reason, right, if price should take out that particular high, what does that mean? It means that what there might be a possibilities of what continuation to the upside, right? And if there is no possibility of continuing to the upside, if price is not supposed to continue to the upside, it simply means that what the market took at this particular high just as what a liquidity for price to fuel itself to the downside, right? So if this high, if the market do not take at this high for a possible retracement, for a now continuation to the buy, it simply means that what the market just took at this high as liquidity for a possible sell. And looking at DSY, looking at the fact that DSY is still looking bullish, right? That should give you a hint that what there is no reason why you should start looking for buys yet, right? Because of the fact that you now know that DXY is bullish. So looking at DXY, if the DXY should start pushing for a buy, right? The DXY should start pushing for a buy from this particular level where it is currently, as where price is sitting currently at the moment. The DXY start buying. What do you expect to happen on the gold and it's other cross currency cross? We're going to be having sell. So that way now you don't want to see that okay, since the DXY is bullish, right? I should not start also looking at gold being bullish as well too. You just want to make sure that what if you're going to also be looking at buying gold, you want to be very, very careful. You want to make sure that what you are very, very careful because we know that the DXY is bullish and already DXY has already came to sit on the discount level and is actually pushing. So if the force should come, especially during the New York session, if we start having buys coming in, right? That way we might not start seeing the buys coming in on what's it called on the dollar as well too. So looking at the dollar now, all we're going to be doing is not just trading blindly. So now let me remove all these things so we have a cleaner what's it called chart, right, for us to evaluate thoroughly. So looking at everything, just like as I've explained, since this area has been taken out right now, right? So there is going to be two things. This high here is a weak high, for instance, for now, because it was all these move here, this move that happened here was what was responsible for price taking at this low and this particular low here, right? So there's possibilities of price still coming back to the downside or possibility of price moving to the upside. The reason why price is going to come to that, like I said, this might just be a liquidity. The market just took out those who are selling here because there are some persons that will be here. There are some persons that will be on that high there, right? There are some persons that will be on this area here selling from this region, right? People might be here selling and their stop loss might just be right above this high. Their stop loss might just be right above this high, right? Let's say they had a sell candle, that sell candle that they see there, and they might just be having their stop loss right above this high in expectation that price should sell, right? And then the next thing, what might possibly happen? Market just took them out and then still selling, right? So this might just be a stop hunt, which we are not very, very sure yet. We're not very, very sure yet if that's actually a stop port. The only thing that is still giving us hope that that might be a stop port is seeing DXY buying, right? So now that DXY is buying, all we're just going to be doing is what? Looking at structure carefully on the lower time frame, right? On the lower time frame, clearly seeing that okay, price made his move to respect this demand level. But if you look at the way the price was, if you look at the way price got delivered, right? If you look at the way price got delivered to this high, you will see, you will see that the market move in a form, it didn't really move in an impulsive way that is indicating momentum, right? You will see that market was just making a series of higher highs and higher low, just going making series of higher highs and higher low consistently up until when price made this particular move, right? So this market made this move, and this was the demand that led to all this particular move to the upside, and that was where price has reacted from. So meaning that what this region here now has been mitigated. So if this region has been mitigated for any reason, if price should start selling again, if price should start selling and approaching this region, it means that what this guy will fail. Because the reason why it's going to fail now is because price has actually mitigated this region already. So since price has mitigated this region already, it makes this guy a weaker zone, right? So definitely there should be what? Price looking at what? Selling and taking out all this region. And mind you too, the reason why price is going to take out all this region is now what? We now have this region to be like a trend line liquidity. So we have a trend line liquidity, we have a double top, double bottom liquidity, right? So all this region here now is just looking like a liquidity. So because definitely there are people who are buying from all these zones we are seeing. All these zones we are seeing, people are actually buying from this zone. So looking at the way price was actually delivered to that region, it means that there's high tendency of price taking out all these region here, everything from this region here, and then selling. But does that not mean that because we are seeing that now we're not going to buy or we're going to be start selling? No, that is now where your strategy now comes in. We're just paying attention to structure. We're just looking into structure. Your strategy will come in based off what you are considering. For me, for example, now the reason why I want to be in a particular trade, I want to consider liquidity first, then point of interest, right? I want to consider liquidity first and then point of interest. So take for instance now, if let's say I was supposed to sell, right? If I was supposed to sell on this DX or this gold, for example, now, right? If I'm supposed to sell, the one reason why I'm going to sell from here now, let me show you guys something. If I'm going to be selling from here, for instance, now, I'm going to be selling one because I have a bearish engulfing candle here. I have a bearish engulfing candle here, right? I have a bearish engulfing candle here, and price just took out this particular high. But the question now is, okay, here's my point of invalidation. Do I have a stronger high there? No, I do not have a stronger high here because this particular high now has not taken out any significant level. Unless if this particular high now has actually taken out a particular level and make a pullback, that way I might not be very, very confident to start looking for a sell. Because at that point now, I know for sure that the DXY will definitely be bullish. For price to have actually taken at this low, right? That way DXY is already making strength, right? And then I now have this region to be a strong high. This region will be a strong high, right? I will now start looking for sells from this premium pricing to what? Target all these guys here to be taken out. Most importantly, targeting this first point here as my take profit level, right? But for any reason right now, I will not want to find myself entering any trade from this region at all now. I don't want to find myself anywhere in this market at all now because there is no confirmation yet for me. There is no what? Confirmation yet for me. The confirmation I'm just seeing is just one confirmation, just candles, bearish engulfing candlestick. But the bearish engulfing candlestick is still not aligning thoroughly well with what I'm supposed to be seeing. So that way, I will stay on the side. It's better to wait and have a good setup than to jump into a trade because you just see one confirmation. So definitely in a strategy, you should have at least 1 to 2 theories confirmation. One, maybe structure aligning in direction together with direction, maybe place of liquidity, and then place your point of interest. The point of interest might be maybe your order block, might be a breakout block, might be maybe support level, might be a support on resistance, might be a resistance on support. That way now you are not confident enough to now say, okay, good. These are the reasons why I'm actually entering this trade, and you have a point of invalidation. So the moment you're not having a point of invalidation and you're just trading, because by the time we are saying we are selling from here now, for example, because of this candles, we are selling from here now. Does it make any sense? It doesn't make any sense based off what we have seen across what is happening in the market. Because one, this low here now was responsible for price taking at this high. So if we now join the categories of people who are just going to be selling from this particular high, knowing fully well that what this guy here is still very strong. The price has not taken at this point here now. Then we're just trading blindly. So you don't want to what trade blindly this time around. You want to make sure that you have reasons, you have confirmations, you have reasons why we're going to be jumping into trade. And also, everything I'm going to be doing this week is going to be updated on the channel, right? So you want to make sure that you are very much active on the channel this week, that I'm very much active with you all, sharing all these nuggets with you guys for free, right? And uh, sharing insight on how I look into the market. What has actually, the same thing I'm sharing with you guys now, it is what I've actually used in making money consistently from prop firm, right? It is what I've actually shared with most of my students, and they are actually making money from the market consistently as well too. This money you already saw, you guys saw the profit that some of my students already made already from the market, right? These are things that they learned. These are things that they've gotten from just what being around. These are things that they've also gotten that you are also receiving for free right now. These are things that some persons actually paid for. This free thing that you are seeing, right? It is what some persons actually paid for. So it is better you fold your hands, wait and see the market leading you, giving you a direction, and that way it now helps you to what being able to what follow. You don't want to be leading the market, right? You want to make the market, you want to allow the market to lead, then we'll follow. If the market is leading and we are following, we are now letting the market know that yes, so we want to show us what you're going to be doing. We want you to show us where you are going to. That way it becomes what easy. It becomes what easy, right? So I hope this is very, very clear, and I hope everybody has what from what we've shared today, and I hope everyone is having a clear insight on what we're going to be expecting the market to do already. I hope we have. If you understand what we've been talking about since, and you have an expectation already, just drop one on the chat box. Let's have one on the chat box. If you're clear what we are saying, and you know that okay, you have clarity on what to do already in the course of the week, just drop one on the chat box. Let's see. Let's have one on the chat box. Just drop one on the chat box if you've been following and you know that yes, you you are fully set and prepared for this, right? Prepared for this. Just drop one on the chat box. So that way now we know that this week is not a random occurrence. We're not just going to be trading blindly at all this week. We're not going to be trading blindly at all this week. This week we're going to be trading with good. We're going to be trading with what? Good reasoning. Because one important thing you need to know is you should not be trading blindly, right? If you could have a how and why price is moving, right? If you can have a how and why price is moving, definitely you have a good reasons to start saying, okay, this is the reason why I'm going to be trading, right? If you could have a how and a why, that way you have enough good reason why you should be trading. Because that way now you are well convinced. That way you are convinced well enough that okay, this is the reason why I'm actually taking this trade. It's not like someone just say jump into buy or sell, right? This is not time for someone to say buy now, sell casually, and you do not have clarity on what is happening. If you have been in this call, definitely you have a reason why. If you're going to be taking any trade, you have a guide, right? You have a guide that will engineer you or will lead you towards the right path. So make sure you follow through thoroughly with what we've explained. Pay attention to details. Make sure that you have one or two confluence, right, as a reason before you start jumping into the market. Don't just say, I'm seeing this candlestick and I'm good to go. No, evaluate thoroughly. So when you are putting in your risk, if you are risking 1%, you are risking 2%, you are risking 3%, you are risking 0.5%, you know that okay, I have confidence to why I'm actually risking this particular their stuff. If it should cross beneath this level, which is my invalidation point, I know that yes, it is point of invalidation and I don't have issues with it. Then you evaluate if you take a loss, for example. But if the market is playing well for you, definitely you now know that yes, there's a good reason why you entered into and you're happy, and that will give you more confidence on taking more good trade because you will know the reason why you actually took the trade. If you actually take profit from it, it rewards you better. You feel fulfilled, right? You feel happy because you know that you do not just enter that trade card. You do not just say somebody just told you to just buy or sell. That's why you're entering it. Now you are buying and selling because you have awareness of why you are doing that, taking that same action. And that is what makes you a financial leader, right? As a financial leader, you should be able to see through to what pricing is saying and be able to interpret it properly. Even if it's not clear to you, if it's not really clear to you, definitely the best thing, you are not supposed to be forcing yourself because you are risking money. And since you are risking money to make money, you want to be very, very much clear on what you are doing. Don't follow the crowd. because the crowd is not what is going to be feeding you. Do not follow the crowd, because the crowd is not what is going to be feeding you. It is what you know that will put food on your table. It is what you know that will put food on your table. So what I literally look into, what I teach my students in terms of entry model, it is one, the place of point of interest, a place of liquidity, and in alignment with structure. Keeping it simple. That is if I want to swing, right? If I'm day trading or scalping, definitely there are still some other things I also look into, right? But the most important thing you need to focus on first before you start looking at entry model. The fact the moment you can actually align structure very well to what you want to do. If you are trading, even if you are trading anything in the market anywhere, as long as you know where to put your stop loss and where to put your take profit, trust me, you should be able to make money. If you are actually having what? If you're actually having to understand structure properly, if you're actually going to understand structure properly, right, definitely you should be able to what? Know what you're doing. So now looking at it now, if let's say gold, for instance, is supposed to buy, let's say make a pullback into this region and start buying from here and to target it, definitely what should you be expecting on DXY? They should be expecting DXY to keep selling, right? If the market is going to pull back into this region and start buying, then you should expect DXY to what? Keep selling. But if this market should make, let's say, come into the inefficiency better more and start tanking, that way you already know what is happening on the DXY, right? So all we're going to be doing is what? Making sure that we are aligning properly. DXY in the key zone, gold in the key zone, Euro USD, GBP USD in the key zone. So anyone that is now looking very clean and clear, that has good reasons enough for us to be in the trade, that is the one we're going to be taking. And just keeping it simple that way, right? So we're just going to wait. New section is coming in very soon. All we're going to be doing is just pay attention to what price is going to be doing, and then we execute with good reason. If the reason is not clear enough, we stay on the side and wait. Mind you, one or two good setup in a week is better than taking 100 trades and you're taking losses anyhow, right? So if you actually enjoyed this section, let's see fire on the chat box. If you enjoyed this session, just drop fire emoji. Drop fire emoji on the chat box. If you enjoyed this session and you want us to be having more sessions like this, just drop fire on the fire on the chat box. Yeah, drop fire emoji. Drop fire emoji. Let's have it. Let's have it. And trust me, this week is going to be a banger. This week is going to be a banger. Trust me. This week is going to be a banger. All you just need to do, keep it simple. Keep it simple. Stay focused this week. Let this week be the week that you will focus. Let this week be the week that you will focus. If you are not doing anything, if it's time for you to go and study, go and pay more attention to chart, study chart very well, right? Go to the chart, mark out chart, see what market has been doing. Majorly, if you want to mark out chart, try to use the H4 time frame and the daily time frame. Use the H4 and the daily time frame as a key guide, right? Use it as a key guide to see what market has been doing in the past. That way you are learning. If you know that you want to learn more about candlestick pattern, we have a lot of books online already. We have the candlestick Bible. Even on baby pills, you see candlestick material. First thing, go and study those things. Pay attention to candlestick patterns very well. There are sometimes that market might not give you good entry on your point of interest. Candlestick is just what you just use. As long as you are in alignment with structure, because see, in anything you want to do, in any strategy you are using in this market, if you don't understand structure properly, you do not know where the market is going to, trust me, you are just losing already. Forget the strategy that you use that will give you your setup. If it's not aligning with structure, with direction, you are losing already. Because there are some setup personally for myself that I've actually seen, right? That I saw setup, which is my entry model, but the entry model was not aligning in direction. I took a loss. And that thing really gave me a very sound warning that thing, it gave me a bell on my head that it means that it's not only for you to just have an entry model, right? It makes sense for that entry model to be aligning with what the overall direction. If it's aligning with the overall direction, it makes easy. It is very, very easy for you to now start what? Trading peacefully, right? It makes sense for you to now start trading peacefully. So I hope you guys are already more aware of what we're doing today and then in course of the week as well too. So we're going to be ending this section here. If you're having any question, you can drop it on the chat box. If you're having any question or possibly you want to ask me anything, definitely I'm always active on the channel, right? On the Telegram. You just send me a message. We'll look into what we're going to do possibly. So this week is going to be a banger week. So no irrational trading. No irrational trading. Let's just be very, very much focused. Let's be very, very much what's it called, attentive to what we are doing, and trust me, we're going to get it done. So thank you all for joining. I'll see you guys in the channel, and let's make money this week. If you love Whalesfx, give me a thumbs up there. All right, guys, I'll see you inside.